After weeks of waiting, Chancellor Rachel Reeves unveiled her autumn budget yesterday, which was jam-packed with tax changes. We are going to run through all the major announcements, so strap in. My name is Jack Reeves and welcome to today's episode of Tax Tidbits, where the Chancellor opened her speech yesterday by announcing that this budget will raise taxes by £40 billion. Reassuring words, right? Well, following this, her first major announcement was to confirm the increase to national minimum wage from April next year. The national living wage payable to over 21s will increase by 6.7% to £12.21 per hour, previously £11.44. Additionally, the national minimum wage for 18 to 20-year-olds will rise from £8.60 to £10, and the national minimum wage for apprentices will rise from £6.40 to £7.55. These are some major increases across the board, which will help those struggling with the cost of living, but will have significant impacts on employers, specifically small businesses. The Chancellor announced that she won't increase national insurance, VAT and income tax for working people, and that there will be no extension to the frozen income tax and national insurance thresholds. This means that from 2028 and 29 tax year, the personal tax thresholds will increase in line with inflation, which will help prevent people from being dragged into higher tax bands as their wages increase. For employers, Ms. Reeves comes in hot with a 1.2% increase to employers' national insurance contributions, increasing them to 15%. In addition to this, the threshold where businesses begin to pay these contributions will be lowered from £9,100 to £5,000. So essentially, employers will pay a higher percentage of contributions on a higher amount of their employees' earnings. There was some hope for small businesses though, as the employment allowance, the amount that employers can reduce their national insurance contributions by in each tax year, will be increased from £5,000 to £10,500. This is a huge increase, and the Chancellor has said this will mean 865,000 employers won't pay any employers' national insurance contributions next year, and a further 1 million businesses will pay the same or less than they did previously. So this somewhat reverses the effects of the increase to employers' national insurance contributions for small businesses. Moving on to individuals, where we saw the most changes. The first change is to stamp duty payable on second homes, which will increase from 3% to 5%. This change is effective from today, and the Chancellor is definitely moving fast with this one. Capital gains tax, the tax charged on profits from selling assets like second homes or investments, is also increasing. The lower rate of capital gains tax is increasing from 10% to 18%, and the higher rate is increasing from 20% to 24%. One thing that is not increasing is the threshold for inheritance tax, which will be frozen for an additional 2 years. These were already frozen until 2028, but will now be extended until 2030. This means that the first £328,000 of any estate can be inherited tax-free. This rises to £500,000 if the estate includes a residence passed to direct descendants, and doubles to £1 million if the tax-free allowance is passed on to a surviving spouse. Additionally, inherited pensions will be subject to inheritance tax from 2027. These two measures will increase the amount of inheritance tax paid without increasing the rates due to fiscal drag. Fuel duty will also be frozen next year, and the government will maintain the existing 5p cut for another year too. If this wasn't frozen, fuel duty would increase by 7p per litre, which the Chancellor said would be the wrong choice for working people. the duty on draft alcohol will be cut, which according to the Chancellor means a penny off the pints at the pub. Alcohol duty on non-draft alcohol products will increase in line with inflation from February next year. However, the government is reinstating the tobacco duty escalator, meaning that tobacco duty will increase by inflation on top of the planned 2%. The tax on hand-rolled tobacco will also increase by 10% this year. On top of this, they will introduce a flat rate duty on vaping liquid from 2026 and at the same time make a one-off increase in tobacco duty to keep the incentive for smokers to give up smoking and transition to vapes. Moving on to benefits, the carers allowance earnings limit is increasing. This is the amount that carers can earn and still receive the carers allowance of £81.90 per week. It will increase to the equivalent of 16 hours at the national living wage per week, so £10,158. Lastly, a new fair repayment rate will decrease the amount of debt repayments that can be taken from a household's monthly universal credit payment. This will be reduced from 25% to 15% of their standard allowance to allow the poorest households to keep more of their payment each month. And that is it for this week's episode of Tax Tidbits. I hope you have found our rundown on the autumn statement helpful and it's given you a bit of an insight into the Chancellor's plans for the next tax year. If you like this video, please make sure to subscribe so you don't miss any tax news, and we'll see you next week.